Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to look at one of the most popular stocks in the stock market today, and that is Microsoft. We're just going to check the pulse of Microsoft stock and their business, try to think about, how much growth is left in this one over the next few years. And if you're not currently in Microsoft, is this a good time to buy? Or if you've been a long time holder, should you pick up a couple shares now, expecting bigger things in the future? Reminder, as always, that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own due diligence before jumping into any stock. And a reminder, if you like stock market analysis like this and other personal finance videos, please give this video a like, subscribe to the channel. Thank you to everyone who's helped the channel grow so far. All right, whenever I do these stock forecasts, which I've done quite a few on this channel, I always like to do a little good news, bad news, bullet points for the company. And I always lead off with the bad news just because it's important to keep a grasp on what could go wrong with the stock. And I think a lot of times in the market today, we see a lot of bull cases for stocks, just this imminent bull case for everything out there. And while I feel very good about Microsoft over the long term, I also think that no stock is free from their share of concerns. And with a top performing stock like Microsoft, it is hard to punch holes in the plans. But a couple things that came to mind as I was doing my research. The first one is the company's number one product for so many years, which is, of course, Microsoft Office and the Windows operating system. From a consumer side, the growth prospects for those products are probably entering a declining period, and maybe over the next 3 to 5 years. That's not necessarily a bad thing because they have supplanted those products with other new initiatives. But it is interesting to think how much different Microsoft in 2000 is to the Microsoft in 2021. So if you are an investor in Microsoft, as we'll learn here in a little bit, it's all about the cloud and some of the other things. Office and Windows is not going to carry you into the next decade. And luckily for investors, Microsoft has made other bets. Now, with that said, in the cloud, Azure is obviously a beast and has been doing a lot of wonderful things. We'll go on a deep dive on Azure here in a second. But it is important to know that AWS is the number one cloud provider at this point. So Microsoft's best growth engine currently does come in at number 2. And as time goes on with these behemoth battles between Microsoft, AWS, and even Google to some degree, once you get these large corporations and enterprises in, it's definitely hard to steal business from your competitor because the unwind is such a big deal. So it's going to be absolutely crucial for Microsoft to continue to hammer new contracts in the big enterprise space. Because when you're dealing with as much money and revenue as Microsoft is, you need monster contracts to move the growth needle. And they've been able to do that. But it'll be important to continue that growth, which is always a risk because there's only so many whale contracts out there. And at the very least, Microsoft Azure sales have to continue as the number 2 cloud provider to stay at the level that they're at. And with that in mind, we do have to think a little bit about this sort of COVID cloud consolidation, if you will, that's went on in the market over the past year or so. Obviously, the demands of doing business online and through the cloud have grown exponentially over the past year, and that has created new contract opportunities for all cloud providers. And Microsoft really rocked it as far as taking their share of the pie. The question, I think, becomes for 22 and 23, in those years, is this consolidation period that led to record growth in 20 and 21, will that tend to taper off? And the cloud market really depends on which kind of statistical provider you look at. I browsed through several articles trying to get a feel for how much growth is left in the cloud market. It does seem like there's a fair amount, but how many people will be signing new contracts over 2022 versus 2021? I think that's the big X factor because as soon as you start stalling from a growth perspective, stocks tend to stall as well. And that's where you could get in a lull for Microsoft stock just from the market itself, the cloud market itself, quieting down a little bit. All right, and the last kind of bear case I'd throw at Microsoft is just like the rise in mobile and the fact that they really just don't have a horse in that race. So if I see anything with Microsoft, I see like a little bit of weakness in the consumer side. Now you could make the argument that Xbox plays into that, or gaming in general plays into that, but I don't think that's quite at the same level as you would see from e-commerce on the Amazon side and mobile revenues that you would find on the Apple, Google side. All right, now on the bull case for Microsoft, them sort of embracing this enterprise first environment where they're focusing on big companies with big problems and big contracts, I think is a very shrewd move. This is how they sort of entered the cloud marketplace, and it's paid off big time. And let's face it, while corporate contracts don't come in at the same volume as consumer product purchases, they are always more valuable. And once you get an enterprise client on board with Azure and some of the related systems, then it's very hard for them to come off of it. It's just disruptive for a company to change a cloud provider, to change a document provider, a Microsoft Teams provider. All those things create delays, which of course costs a company money. So Microsoft is in a fantastic place focusing on enterprise business. All right, the next big bull case for Microsoft, in my opinion, is the fact that Azure has this hybrid cloud component to it. So that is really going to be key to taking any market share from Amazon. They've built Azure to work with many other different platforms and systems. So they want to be able to solve complex cases where enterprise clients have multiple partners that need to connect to cloud, and not only connect to cloud, but be able to analyze those processes and data points across an organization. And this is where Microsoft, has almost come into kind of like an open source game with a hybrid cloud structure. Meanwhile, AWS, while it does have, thousands of great partners, they are still trying to keep kind of a four-walled world in their server and cloud deployments. So in my opinion, Microsoft has set themselves up well, not only for flexibility to land new enterprise clients, but perhaps better than that is the opportunity to offer additional services and connection points down the line. Listen, like I said, there's only so many enterprise clients out in the world, and no one's tapped them all yet from a cloud market share perspective, but we'll eventually hit this time with AWS and Microsoft and everybody else where you're going to be better off building revenues on your existing clients, aka offering more services and features. And at least right now, it looks like Microsoft has sort of an inside track on that because they're offering the ability to work with other platforms. And lastly, on the bull case for Microsoft, the Xbox launch was phenomenal. They reported $5 billion in gaming revenue for the first time ever. Now, while $5 billion is a ton of money to us, it is still just a small fish in a bigger pond for Microsoft. That's going to be in the neighborhood of $40 billion every single quarter. But the fact that the user base is growing strong, they've been pretty innovative with their approach to gaming. For example, there's an Xbox subscription model where you actually do not have to pay for the unit up front, which is obviously a cost concern for many players. So instead of paying $500 up front for an Xbox unit, Microsoft is testing other ways, including a method for you to sign up for a subscription service that not only pays for your console over a 2-year span, as well as other services and features that gamers find attractive. And at the end of the day, if you think about some 15-year-old kid, what's easier, $35 a month for technically a better package when you consider the gaming library online, Or do you want to scrape together $500 just to get the console? All right, so those are my bull case, bear case bullet points, if you will, for Microsoft. Let's dig into stock. Let's look at the growth rate that analysts are projecting and see if this is a good time to get in. All right, taking a look at Microsoft today. It is actually up today. You've got a price of $239. And this is a one-year chart. And around this time last year, it was trading at $184. Now, that was obviously prior to the pandemic, so you did have a dip. And then, of course, the rocket ship from there. Just out of curiosity, it looks like the low point was March 20th at 135. So if you bought on the pandemic dip, you essentially have added $100 to your share price since then. All right, scrolling down to the fundamentals, we got a PE ratio today of 35.46 and an EPS of 671 on the trailing 12 months. We'll get into the PE and EPS ratios in a little bit more detail here in a second. It is important to know with Microsoft, you do get that 0.97% yield as of today's price. All right, taking a quick look at Microsoft's PE and forward PE over the past several years. So let me switch over to years here. Today, you're about 35 on the PE. And you go back historically, even back to 2017 and 2016, and it's not a ridiculous level. So you had numerous instances after 2015 that you were in the 30s. This 2018, I don't know what happened here with the 66, but that's obviously an outlier. That could have just been a market event going on at the time that the snapshot was taken. On a forward PE basis, the 31 that you have today is definitely higher than we've seen in the past few years. It looks like, in the neighborhood of 20, 25 is probably a more reasonable valuation of upcoming earnings. But I gotta say, I've seen much higher multiples than a 31 in today's market, so I wouldn't fret about that too much. All right, quick look at some of the other fundamentals. Trailing 12 months revenue. $153 billion, which is absolutely incredible. You got gross profit on that at $97 billion. And you look down at the balance sheet, you got total cash on hand of $132 billion, which is an incredible place to be. Debt of about $83 billion. But when you put two and two together on this one, you've got $153 billion coming in every year in revenue, if not more, once things grow. You also have $131 billion in the bank, which could conceivably pay this off if they really wanted to. You got low interest rates, AKA you've got no problems on the balance sheet here for Microsoft. And since we have so much news about short ratios these days, short percentage of float, an astounding 0.56%. Nobody is putting their money where their mouth is on shorting Microsoft, at least at this time. All right, let's take a look at what analysts are projecting. The good news about a large stock like Microsoft is you have a lot of quality analysts who cover it, and the stock is so large that it doesn't move at a frenetic pace like you would see smaller cap stocks do. So this is for the full fiscal year of 2021. We're 2 quarters into it. Microsoft's fiscal year runs July 1st through June 30th, so we're halfway through. Analysts are calling for an EPS of $7.39. You can see it's a real nice uptick of whatever, $1.70 or something like that. So that's for 2021. Now it does look like growth is projected to slow in 2022, at least as of today. And a lot of things can change, and analysts change their minds all the time. But here's what's interesting with Microsoft, I think. The past 4 quarters, they have beat earnings estimates by a significant margin, particularly for a company as large as they are. So the last 2 quarters have essentially been plus 20%. And even in the height of the pandemic, they were winning, essentially plus 10%. So I factored that in a little bit for myself. And if you added an average of plus 15% to this number, so the average that Microsoft is beating by, plus 15% on 739 brings you at 850. 850 divided by, when I wrote this down, it was 236. The stock's already up. That would give you a PE in July of 27.76. If you do the same thing for next year and you add 15% here, which is probably conservative the way Microsoft's been running, you get an EPS of $9.30. And I divided it into $236 share price because I did the math before this video, and that gave you a forward PE of 25. All right, so if you're aligned with my projections, I see Microsoft certainly by the end of July when they report their final fiscal year, I see that EPS plus 15% from today's projection of 739. If that materializes, then you have an actual PE at the end of July of 27 on a price of $236. Now the stock's up a couple bucks today, just enough to mess up my calculations. But the bottom line is, I would say Microsoft right now is fairly valued. If you're lucky enough to see a dip of any kind and you're not currently a Microsoft shareholder, then I could see getting into this one for a 3 to 5 year hold. It would be nice in the 220s. It's hard to tell if that would ever happen, but you're essentially buying at what I would consider to be a fair value right now. All right, taking a quick peek at the TipRanks dashboard to see what the best performing analysts are saying here. And we always sort by 4 and 5 star analysts only, and we always sort by the date to make sure we get the freshest information. Microsoft just did their quarterly earnings, so it's great because everybody readjusts their projections for the future. And the bottom line here, at least for the outlook over the next 12 months, it's a pretty consistent plus 15 to plus 25% projection for Microsoft from all of these analysts. All right, so those are a couple views on Microsoft as it stands today. Obviously, this stock has made a lot of money for a lot of people. Can you still make money if you didn't get in this one, say in 2015 or whatever? If you buy it today, can you still make money? And the answer to that is yes, and I would consider it to be a strong conservative growth play for the future. Microsoft, very unlikely that stock is going to drop by 50%. And when you factor in the dividend and the potential growth in the cloud business over the next 3 to 5 years, then it's a solid investment. Certainly better than what you're getting out of savings accounts these days. All right, guys, so that's my 2021 Microsoft forecast. Let me know what you think in the comments. Please give this video a like and subscribe if you enjoy this type of content. We will see you on the next video.